Let's get one thing straight. This isn't your usual car video. No tire smoke, no horsepower flex, no bro, check my cam. Here's the deal. What I'm about to tell you could save you more money than a lifetime of YouTube maintenance hacks. While you're busy arguing about big block versus small block in Facebook comment sections, there's a financial grenade sitting in your garage with the pin already pulled. And I'm not talking about your project car's ability to eat your wallet. I'm talking about something that could wipe you out completely. Picture this. You just spent 3 years restoring a 1967 Mustang Fastback. We're talking frame-off, rotisserie restoration. You've got receipts for everything. New crate engine, $7,000. Paint and body work, $12,000. Interior, another $6,000. Chrome, suspension, brakes, wheels, tires, every nut and bolt documented. You're all in for $50,000. Your pride and joy, your retirement fund on wheels. You take it to shows, you win trophies, people stop you at gas stations to take pictures. Then one Tuesday afternoon, some clown in a Camry decides that red lights are merely suggestions. T-bones you right in the intersection. Your Mustang? Totaled. Completely destroyed. But hey, you've got insurance, right? You're covered. You sleep easy knowing that. 3 weeks later, you get the check from your insurance company. $18,000. Wait, what? $50,000 invested. $18,000 paid out. You just lost $32,000 because of 4 little words you didn't understand. Actual cash value insurance. Welcome to the most important 20-ish minutes you'll spend this year if you own a classic car. This isn't going to be boring insurance mumbo-jumbo, I promise. But if you don't pay attention to this, you could become the next cautionary tale in your car club. And trust me, nobody wants to be that guy. So here's the deal. Most of us, when we buy a classic car, we do what we've always done with our daily drivers. We call up our regular insurance company, we add the car to our policy, and we move on with our lives. We're covered, right? We've got collision, comprehensive liability, all the good stuff. We're golden. Except we're not golden. We're not even bronze. We're more like rusty pot metal that's about to crumble into dust. Here's what nobody tells you about regular car insurance and classic cars. Standard auto insurance is designed for one thing: depreciating assets. Your 2023 Honda Accord? The second you drove it off the lot, it lost value. Every year, every mile, every French fry wedged in the seat cushion. It's worth less. Insurance companies love this because they know exactly what it's worth when it gets wrecked. They've got books, databases, algorithms, the whole 9 yards. But your classic car, your project, that thing you've been wrenching on for years, that's not a depreciating asset. That's an appreciating asset. Or at least it should be. You're not driving something that loses value. You're driving something that gains value. Every upgrade, every restoration hour, every period correct part you hunted down on eBay at 2 in the morning, that's all value. But your insurance company, they don't see it that way, not even a little bit. When you've got standard insurance on a classic car, you're insured for actual cash value, or ACV. Sounds official, right? Sounds fair? It's not. Here's what actual cash value means in real-world English. We're going to find the crappiest, most clapped-out example of your car that's sold anywhere in the country. Knock off some money for depreciation, add insult to injury, and that's what we're paying you. They don't care that you used all correct date-coded parts. They don't care that your paint is show quality. They don't care that you can eat off your engine block. They're going to look at some database, see that a rough 67 Mustang with a seized engine and more Bondo than metal sold for 15 grand in Arkansas, and they're going to base your payout on that. Remember our friend with the Mustang? 50 grand invested, 18 grand payout? That's actual cash value at work. The insurance adjuster looked at his car and said, "Well, according to our records, a 1967 Mustang Fastback in average condition is worth $18,000. Didn't matter that this wasn't average condition. Didn't matter that he had every receipt. Standard policy, standard rules, standard heartbreak. And here's the real kick in the pants. If you try to argue with them, you're fighting an uphill battle with a rope made of dental floss. You can bring receipts, appraisals, photos, expert opinions. Doesn't matter. The policy says actual cash value, and that's what they're paying. End of story. Enjoy your $32,000 life lesson. Now, before you start spiraling into despair and wondering if you should just park your classic in a hermetically sealed bubble, there's good news. Really, really good news. There's a completely different type of insurance specifically designed for classic cars. It's called agreed value coverage. And it's the exact opposite of the nightmare I just described. It's like the difference between eating gas station sushi and eating at a 5-star steakhouse. Both are technically food, but only one of them won't destroy your life. Here's how agreed value works, and pay attention because this is the whole ball game. When you get an agreed value policy, you and the insurance company sit down before anything bad happens, and you agree on what the car is worth, not what some database says, not what some clapped-out example in Arkansas sold for. What your specific car, with your specific modifications and condition, is actually worth. You get the car appraised, you provide documentation, you send photos, you show receipts, and then the insurance company says, "Yep, we agree this car is worth $50,000. They put that in writing. That becomes the policy value. And if the car gets totaled, you get $50,000, not 18, not 25 with a song and dance. $50,000, the full amount, every penny you invested. No depreciation, no negotiation, no adjuster looking at you like you're crazy when you say your Mustang is worth more than their database claims. The value is agreed upon, and that's what you get. Period. Full stop. End of discussion. This is the difference between waking up in a cold sweat after an accident and actually being able to replace what you lost. This is the difference between telling your spouse we're financially ruined and telling them we're okay. The insurance is covering it. Now you might be thinking, this agreed value thing sounds amazing, but it probably costs a fortune, right? Wrong. Dead wrong. Hilariously wrong. This is the part that blows people's minds. Agreed value classic car insurance from companies like Hagerty, Grundy, American Collectors Insurance, or American Modern is usually cheaper than standard insurance, sometimes way cheaper. We're talking paying less money for better coverage. It's like finding out that premium gas is actually cheaper than regular. It doesn't make sense until you understand why. Classic car insurance companies know something that regular insurance companies don't. People who own classic cars don't drive them like daily drivers. You're not commuting 50 miles a day in your 67 Mustang. You're not doing Costco runs in your 70 Chevelle. You drive it to shows, to cruise nights, maybe a weekend blast down some back roads. Most classic car policies have mileage limits, usually between 2,500 and 5,000 miles per year. And because you're driving it less, you're way less likely to have an accident. Plus, people who own classic cars tend to take better care of them. They're not texting while driving. They're not eating breakfast burritos over the steering wheel. They're not letting their teenage kid borrow it to impress their prom date. Classic car owners are careful, cautious, and paranoid in the best possible way. Insurance companies love this. Low mileage plus careful drivers equals lower risk, and lower risk means lower premiums. I've seen people switch from standard insurance to classic car insurance and cut their premiums in half while increasing their coverage. Paying $300 a year instead of $700, and getting agreed value coverage instead of that actual cash value garbage. It's legitimately the best financial decision you can make as a classic car owner. But here's where it gets even better. And this is stuff most people don't know about. Classic car insurance policies come with benefits that standard insurance doesn't offer. We're talking spare parts coverage, inflation guard, roadside assistance specifically for classics, even coverage for your tools and equipment if they're in the car during an accident. Let's talk spare parts coverage first. You know that garage full of extra parts you've been collecting? The spare transmission, the extra carburetors, the trim pieces you scored at a swap meet? Standard insurance doesn't cover any of that unless you've got a special rider, which costs extra money. Classic car insurance? It's usually included. If your garage burns down and takes all your parts with it, you're covered. Some policies cover up to $10,000 or $20,000 in spare parts. That's huge. Inflation guard is another big one. Let's say you insured your car for $40,000 5 years ago. Well, classic car values have gone up since then? A lot. With Inflation Guard, your policy value automatically increases each year to keep pace with the market. So that $40,000 car might now be insured for $50,000, and you didn't have to do anything. The policy just adjusts. Try getting that with State Farm. And roadside assistance? Standard roadside assistance is designed for modern cars. They're going to show up, try to jumpstart your classic with some sketchy portable jumper, and then offer to tow you to the nearest Jiffy Lube. Classic car roadside assistance understands that your car is special. They'll tow you to a shop that actually knows what a carburetor is. They'll use flatbed trucks instead of wheel lift tow trucks that could damage your suspension. It's assistance designed for people who give a darn about their vehicles. Now, I know what some of you are thinking. This sounds great, but what's the catch? There's got to be a catch. There are some requirements, yeah, but they're not catches. They're just common sense stuff that you probably already do anyway. First, mileage limits. Most classic car policies limit you to somewhere between 2,500 and 7,000 miles per year, depending on the company and policy. But be honest, are you really driving your classic more than that? If you are, you might need a different type of policy, or you might qualify for a higher mileage plan. Companies like Hagerty offer policies with higher mileage limits. You just pay a bit more. But for most people, the standard mileage limits are totally fine. Second, storage requirements. Your classic car usually needs to be stored in a locked garage or enclosed structure when you're not driving it. This isn't unreasonable. You're not parking your $50,000 investment on the street anyway, right? If you don't have a garage, you might have storage options through the insurance company, or you could look into covered parking arrangements. But having proper storage isn't just for insurance. It's for protecting your investment from weather, theft, and idiots. Third, you usually need a daily driver. Insurance companies want to know that you have another vehicle for regular transportation. This makes sense. They don't want you using your classic to commute to work, pick up the kids from school, or make midnight taco runs. The classic is for fun, not for utility. If you only own one vehicle and it's a classic, you might have to look at a different type of policy. But most people who own classics also own regular cars, so this isn't usually an issue. Fourth, driver requirements. You typically need to be at least 25 years old with a good driving record. Some companies make exceptions, but classic car insurance is designed for responsible, experienced drivers. If you're 22 with 3 speeding tickets and an accident on your record, you might have to wait a few years or pay higher premiums. But if you're a clean driver, you're golden. That's it. Those are the catches. Store your car properly, don't drive it 1,000,000 miles a year, have another vehicle for daily use, and don't be a terrible driver. If you can handle those extremely reasonable requirements, you can get agreed value coverage that'll actually protect your investment. Let's talk about how to actually get this coverage, because it's easier than you think. First step, figure out what your car is actually worth. And I don't mean what you think it's worth or what you hope it's worth. I mean what it would actually sell for in the current market. Be realistic here. Your car might be worth more than a standard book value, but it's probably not worth Barrett-Jackson money unless you've got a truly exceptional build. There are a few ways to determine value. You can get a professional appraisal, which costs money but gives you official documentation. You can research recent sales of similar cars on Bring a Trailer, Hemmings, Classics on Auto Trader, or other sites to see what the market is actually paying. You can talk to people in your car club who have similar vehicles. Do your homework. The more accurate your valuation, the smoother the insurance process will be. Once you know the value, start getting quotes. Hagerty is the big name in classic car insurance, and for good reason. They've been doing this forever, and they're really good at it. But don't stop there. Get quotes from Grundy, American Collectors Insurance, American Modern, J.C. Taylor, and anyone else who offers classic car coverage. Different companies have different rates and different coverage options. Shop around. This isn't like buying a daily driver policy, where every company offers basically the same thing. Classic car insurance companies have different specialties, different requirements, and different prices. When you're comparing quotes, don't just look at the premium. Look at the coverage. What's the agreed value? What's included? Any mileage limits? Spare parts coverage? What's the deductible? Some companies sneak in stated value instead of agreed value. Sounds similar, right? But it's not. Stated value policies can still depreciate your payout. Agreed value means they lock in the number. No surprises, no arguments. If you're insuring something that matters, you want agreed value, always. Most classic car insurance companies make the process pretty easy. You'll fill out an application online or over the phone. They'll ask about the car, about you, about how you use it and store it. They'll probably ask for photos. Good photos. Not fuzzy cell phone pics taken at night in your driveway. Clear, well-lit photos that show the condition of the car. They want to see what they're insuring. Some companies require an appraisal, some don't. If they do, you'll need to get the car appraised by an approved appraiser. This usually costs between $100 and $300, and it's worth every penny. The appraiser will document everything about the car, take detailed photos, and provide a written report establishing the value. This becomes part of your policy documentation. If the car ever gets totaled, you've got professional proof of what it was worth. Once everything is submitted and approved, you'll get your policy documents. Read them. Seriously, read them. I know insurance policies are boring, but you need to understand what's covered, what's not, and what your responsibilities are. Pay attention to the agreed value amount, the coverage limits, the deductibles, and any special conditions. And here's something critical. Update your policy when you make improvements to the car. If you insured the car for $30,000, then spend another 10 grand upgrading the engine, you need to contact your insurance company and increase the coverage. Most companies make this easy. You submit documentation of the work, maybe some new photos, and they adjust the agreed value. Don't assume you're automatically covered for improvements. That's a great way to get surprised when you file a claim. Now let's talk about what happens if the worst actually happens and you need to use your insurance. Because understanding the claims process before you need it is way better than figuring it out while you're standing next to your destroyed dream car. First, the same basic rules apply as any insurance claim. You have an accident or an incident, you contact your insurance company immediately. You document everything. Take photos. Get police reports if applicable. Get contact information from anyone involved. The more documentation you have, the smoother everything goes. But here's where classic car insurance shines. Remember that agreed value you established? That's locked in. If the car is totaled, you're not fighting with an adjuster over what it's worth. You're not digging through receipts trying to prove your case. The value was agreed upon when you bought the policy, and that's what you get. Let's say your car gets hit and damaged, but not totaled. The insurance company will work with shops that specialize in classic cars. They understand that you can't just take your '67 Mustang to Mako and call it a day. They know you need qualified people who understand classic cars. Most classic car insurance companies have networks of recommended shops, or they'll work with a shop of your choice if they meet certain standards. And here's something beautiful. Most classic car insurance companies don't require you to use aftermarket or used parts. If you need body panels, they'll cover OEM or high-quality reproduction parts. They get that putting cheap garbage on a classic car defeats the entire purpose. Your car gets fixed right, not just fixed cheap. The claims process is usually faster and less painful than standard insurance too. These companies deal with car people. They understand the emotional attachment. They understand that your classic isn't just transportation, it's a passion project. They're not going to jerk you around with lowball offers and delay tactics. They want to get you back on the road in a car you're proud of. I'm not saying the claims process is fun. Nobody wants to file an insurance claim. But having agreed value coverage means you're protected in a way that standard insurance simply cannot provide. That peace of mind is worth its weight in gold. Let's talk about some common mistakes people make with classic car insurance, because learning from other people's screw-ups is way cheaper than making your own. Mistake number 1, underinsuring the car to save money on premiums. Look, I get it. You want to keep costs down. But if you insure your $50,000 car for $30,000 because the premium is lower, you just shot yourself in the foot. When the car gets totaled, you're getting $30,000, not $50,000. You saved a few bucks a year on premiums and lost $20,000 when you needed the coverage. Don't be cheap here. Insure the car for what it's actually worth. Mistake number 2, not updating the policy when the car's value increases. Classic car values change. The market goes up and down. Your car might be worth significantly more than when you first insured it. If you don't update your coverage, you're underinsured. Most policies include some inflation protection, but if you've made major improvements or if the market has gone crazy, you need to contact your insurance company and adjust your coverage. Do this at least once a year when your policy renews. Mistake number 3, assuming your homeowner's insurance covers parts and tools. It might, but it probably doesn't cover everything you think it does. Or it might have limits that are way too low. If you've got $30,000 worth of parts and tools in your garage, you need specific coverage for that. Talk to your insurance agent about what's covered under your homeowner's policy and what you need to add. Don't find out after a fire that your entire parts stash was uninsured. Mistake number 4, not reading the policy conditions. Every classic car insurance policy has rules, mileage limits, storage requirements, usage restrictions. If you violate those rules and then file a claim, the insurance company can deny coverage. If your policy says the car must be stored in a locked garage and you're parking it in your driveway, you're not covered. If your policy has a 2,500-mile annual limit and you put 10,000 miles on the car, you're not covered. Read the policy, understand the rules, and follow them. Mistake number 5, mixing up stated value and agreed value. These sound similar, but they're not the same thing. Stated value policies can still apply depreciation. They'll say the car has a stated value of $50,000, but then when you file a claim, they depreciate it based on age, condition, and market factors. You might get $40,000, you might get $30,000. It's not guaranteed. Agreed value is guaranteed. Make sure you're getting agreed value, not stated value. Mistake number 6, not having proof of the car's value and condition. If you insure your car for a specific amount, you should have documentation to back that up. Appraisals, receipts, photos, build documentation. If you claim your car is worth $60,000 but you can't prove it, you're going to have problems if you need to file a claim. Document everything. Keep records. Take photos. The more proof you have, the better protected you are. Here's something else to consider. What if you're building a car that's not done yet? What if you've got a project that's in pieces in your garage? Can you insure that? Yes. Absolutely yes. And you should. Project car insurance exists specifically for this situation. You've got a car that's being restored. It's not drivable yet, but you've already got money and time invested. You can get coverage that protects the car during the build process. It won't cover driving it because you're not driving it, but it'll cover theft, fire, damage to the vehicle, and parts. As the car's value increases during the restoration, you can increase the coverage. This is crucial because here's what happens without it. Your garage catches fire. Your half-finished project burns up. All your parts, all your work, all your investment, gone. And if you don't have coverage, you're eating that entire loss yourself. That's a terrible way to find out you should have had insurance. Companies like Hagerty offer project car coverage. It's usually pretty affordable because the car isn't being driven, but it protects your investment during the vulnerable building phase. Once the car is done and drivable, you transition to regular agreed value coverage. It's smart, it's affordable, and it's insurance you absolutely need if you're doing a restoration. So let's bring this whole thing home. What have we learned today? Regular auto insurance is designed for cars that depreciate. It uses actual cash value, which means when your classic gets totaled, you're getting paid based on what insurance databases say your car is worth, not what you know it's worth. This is a recipe for financial disaster, and it's destroyed countless classic car owners who thought they were covered. Agreed value classic car insurance is designed specifically for collector vehicles. You and the insurance company agree on the car's value up front. That value is locked in. If the car gets totaled, you get that full amount. No depreciation, no negotiation, no heartbreak. This is the only way to properly insure a classic car. Classic car insurance is usually cheaper than standard insurance because you're driving less and you're a lower risk. You get better coverage for less money. It's actually a great deal. Different companies offer different policies and prices. Shop around. Get quotes from Hagerty, Grundy, American Collectors, American Modern, and others. Compare coverage, not just price. Make sure you're getting agreed value, not stated value. Document your car's value and condition. Get appraisals. Keep receipts. Take photos. The more documentation you have, the better protected you are. Update your coverage when your car's value increases or when you make improvements. Don't assume you're automatically covered for upgrades. Read your policy and follow the rules. Know the mileage limits, storage requirements, and usage restrictions. Violating these can void your coverage. If you're building a project car, get project car insurance during the build. Protect your investment from day one. Look, here's the bottom line. You've spent years and thousands of dollars building or restoring a classic car. You've hunted for parts, turned wrenches, sweated in your garage, argued with your spouse about the budget. You've created something special, something that brings you joy every time you fire it up. Don't let all that work get flushed down the toilet because you didn't have the right insurance. Don't become the person at the car show telling everyone about how you lost your shirt when your car got wrecked. Don't be the cautionary tale. Get proper coverage. Get agreed value insurance. Protect your investment and protect your passion. And if you know someone who owns a classic car and they're still using regular insurance, send them this video. Seriously. You might save them from a $50,000 mistake. Now, I know this was different from our usual content. No engine builds, no test drives, no before and afters. But this information is just as important as knowing how to tune a carburetor or set ignition timing. Maybe more important, because you can learn how to wrench on your car, but if you don't protect it properly, you might not have a car to wrench on. We're going to keep making the usual car content you know and love, but every now and then, we're going to hit you with real-world knowledge that'll help you be a smarter classic car owner. Because being passionate about cars is awesome, but being smart about protecting your investment is even better. If you found this helpful, let me know. If you've got questions about classic car insurance, drop them in the comments. And if you've got your own insurance horror story or success story, share it. We're all in this together. And the more we help each other out, the better off we all are. Stay smart, keep your rides protected, and keep those classics on the road where they belong. For more detailed information on classic car insurance and to start comparing quotes, check out Hagerty.com, GrundyInsurance.com, AmericanCollectorsInsurance.com, and AmericanModernInsurance.com. Don't just take my word for it. Do your research, get educated, and make the best decision for your situation. Now get out there and go hug your classic. And maybe call your insurance agent while you're at it.